Okay, good morning, everyone. Welcome to Talking New York Real Estate. We are live this morning here at the New York City Real Estate Expo for 2025. I've been doing this forum for about 15 or 16 years from the very, very start of it. But I'm happy this year that my More network that supports the Talking New York Real Estate podcast and YouTube series is here, and we're live on scene. So if you look behind us, you'll see the large crowd of people, vendors, and clients, brokers, walking around having a good time. Today, we're going to talk a little bit about two things. I'm going to talk a little bit about the state of the market, from where we are, what we have been seeing, where we think we're going to go, and also we have a mayoral election coming up in a week, and it's been very controversial. It's been very heated. If anyone has watched the debates, I have not. They've been kind of comical. However, we have to elect someone, and whoever that someone is needs to understand that we have checks and balances here in New York City, like anywhere else. So we're hoping for the best, whatever the best is. But I want to get the opinion of two great folks here who are also resident New Yorkers, who have lived and worked here for many years, and a little bit about their opinion. Marc, I'd like to start with you. We talked a little bit about this off camera before. Where do you think we are at the moment from a city population perspective? Okay, all boroughs, in our thoughts with who should be mayor, who should not be mayor, and why?
I'm a little hesitant to speculate.
Loaded question.
Yeah, but I mean, early voting has already started, so we know who's voting. We know that older voters are voting more.
Which, by the way, I heard that last night. You're absolutely correct. And I was a little surprised by that.
Yeah.
So I want to talk a little bit about that too. Normally, it's the reverse. The younger folk are running out, early voting, and casting their ballot for whomever.
Yeah.
I heard that last night. Why do you think?
Well, I think part of it is people were a little bit surprised by the result of the primary. And the primary had more voters, certainly, than 2021. The general usually has less voters than the primary. I think this year we're going to have many more voters in the general, just because of the candidates that are running.
Yeah.
And I think people that were surprised in the primary are like, oh, I need to come out early for the general.
Yeah.
And, I think the younger people will come out, but they'll probably vote day of rather than early.
Now, your opinion, borough to borough, okay?
Yeah.
Manhattan, Brooklyn, Queens, Staten Island. Where are we seeing more involvement in who the selection should be, or are we?
Yeah. Well, I mean, I think that's one of the reasons why Cuomo, I think, should be worried, is when you look at fundraising, Mondami has donors in every borough, across a lot of different neighborhoods. Cuomo has a lot of rich donors that are literally banking on him, supporting him through super PACs. And so we see this in presidential politics too. The small dollar donations are indications of enthusiasm. So I think, there's reasons for Cuomo to be worried that there's such a broad coalition of small donations rather than the big dogs giving you $1 million, $1.5 million to a super PAC, because that's not votes.
Correct. Pierre Debbas, let me ask you. I look from behind the scenes and I see what's happening. My initial feeling is, why is it that we can't get our candidates right on either side of the aisle? Whether you're a Republican, whether you're a Democrat, in my opinion, could we do better? Yes. In a city like New York, why is this so difficult? We have problems from a higher level, but in the city of New York, where I would like to think that we as New Yorkers are on top of it.
That's right.
Why is this hard?
Vince, I say it every day. Most important city in the world is New York City. And the fact that these are our options, it's really a sad day for New York. You would think with the magnitude of the role that the mayor of this city plays, that we would have qualified people that you were inspired to be led by. When you look at the ballot and whenever you're going to go vote, your chances are you're going to vote for the less of the evils. Or you're going to vote for a socialist because things have gotten so expensive, things have gotten so difficult, and you truly believe that he'll be able to deliver on everything that he's saying, which I'm extraordinarily skeptical of myself. And one thing, kind of to your point, regardless of party, the greatest example I give, Bloomberg ran 3 terms. Most people don't remember what he ran as. Nobody remembers he ran as an independent one term. He was a Republican one term. You know why? It didn't matter. Nobody cared. It wasn't so divisive. It didn't matter which party you were part of. It mattered your policies. Did you believe in the person? And that's where we have to get back to in politics, especially local politics, because right now, quite frankly, I think that this is a disaster.
You know, Pierre, it's so funny. You're 100% correct. And, you know, people ask me all the time, so who are you going to vote for? And I never divulge really publicly what party I belong to or whatever, or who I want to vote for. But when you said Bloomberg, and I will be very honest with you, okay, for the last week and a half, 2 weeks, I think I'm writing in Bloomberg
Right.
as my choice. And I'll leave it at that, okay? You're so correct.
Mhm.
Didn't matter if he's independent, Republican,
Right.
Democrat. What he did for this town
It was great.
was unbelievable. And he got 3 terms out of it.
I know.
And that's unusual.
Very unusual. And I'll
So-
tell you, most people don't remember what he ran as. That tells you everything you need to know.
Honestly, the last time he ran, I don't remember.
Exactly.
How do you think, though, that whomever wins out of the 3 candidates, the housing market will be affected or not? I mean, we have gone through the past 2 years of really kind of stagnant movement, interest rates, you know, political whatevers. Where do you think, how do you think the result of this upcoming election can affect housing going forward?
So I
in
think
New York City.
you have to analyze it from 2 different perspectives, the rental market and the purchase sale market. Our law firm, as a real estate lawyer, we have one of the most active transactional practices in the city.
we do.
The last 3 months, I've seen it busier on the residential acquisition sales side than I have since 2021. That's a bit counterintuitive because most of us thought that there'd be trepidation in the market given the uncertainty of the election and people would be waiting it out. People want to live here. People will move here, right? And people are buying now because there's value in the market that they haven't seen in several years. Now that's the buy sale. The rental market right now, so if you go back to when de Blasio was in office, right? And de Blasio, for all intents and purposes, was our first socialist mayor. De Blasio changed our rent regulations in the most sweeping manner in New York City history. Those rent regs made it very cost prohibitive for landlords to improve their properties because there's no ROI on those improvements, and it really crippled their ability to increase rents. Now, what resulted in that? The intent of having more stringent rent regulations is to create affordability. But the problem is that didn't work. What it did is it created a tremendous amount of shadow inventory. So there's about 100,000 empty rent-stabilized apartments in New York City, which are sitting empty because it doesn't make economic sense for the landlords to operate them. Think about that, 100,000 units. If I came to you with an economic plan for New York City to develop 100,000 affordable housing units, you would say I'm a genius. This is you unleash that much inventory to the market with a reasonable regulatory environment. So my fear is that Mamdani's housing plan is for rent freezes. That disastrously compounds a problem that the de Blasio administration created, and it doesn't create affordability. It doesn't create more options. If anything, it just results in dilapidated housing. What investor is going to want to invest capital in rental buildings in New York City in that environment? Who's going to improve any properties? And how are you going to create inventory? It's a horrible, horrible concept.
One of the things that a lot of people are getting really fired up about is that if Mamdani comes in, you know, all the rich people are going to leave. They're going to go to Florida. They're going to go to other states. They're going to run out of New York because he isn't going to be sensitive to their needs. Is that correct?
So you're not going to see it the next day. It's not going to be November 6th and you're going to see a massive exodus of people packing up their bags. What you've already seen, and this started during de Blasio, is that a lot of companies, especially major financial institutions, migrated to South Florida. South Florida is becoming a little mini Wall Street. Now, if this happens, I don't think necessarily high net worth people move out in droves, but companies will eventually start to transition to no state income tax states, such as South Florida and Texas, Nashville, Tennessee, and you'll see the continued growth of their corporate presences expand. And over time, it'll be a detriment to New York City in the sense that we'll lose so much tax revenue because people either aren't coming in or capital's leaving. And you saw this in 2020. How many billions of dollars of tax revenue left the city? It wasn't solely due to COVID. Was COVID a catalyst? Absolutely. It was a trend that we were going down. And I think that you won't feel the ripple effect immediately. Over the long term, I think it's not healthy for the city.
Marc, you are the Associate Dean at the Schack Institute of Real Estate at NYU, someplace that's near and dear to my heart. But let me ask you something. So all your students and your enrollment is pretty good, has been good for a long time.
Yep.
When students are coming in brand new, or even those students are a year, 2, 3 years into their degrees in real estate, is any of this talk about what may happen in real estate because of the upcoming election? Does this affect their thinking? Meaning, should I stay with this? Should I not stay with this? Shall I move forward or not? How am I going to make money if everybody's talking about a market that's going to be crazy?
Yeah, I don't think it has that much of an effect. Our enrollment's up. Our enrollment's up post-COVID. I think people that would move to Florida or Texas and that are price sensitive in terms of taxes have already done it, right? That's just that's not going to change. We're always going to have a state income tax. We're always going to have a city income tax.
Right.
If you're price sensitive about that, you're gone, right? And so I don't think that's so much of an issue. As far as our students, this is the place to be. After the New York region, Florida and California are the next places where the most of our students come from. They're coming from Florida to study in New York because this is where the market is. This is where the biggest deals are. Florida's getting big deals, but I think it's a kind of history of the real estate industry, of the biggest players. When we have conferences, right, we'll have people from Florida and Texas, but they'll come here to speak at our conferences, right? And also real estate's national. So, if they learn here, they'll go all over the place.
Hi, it's Stephen Bailey from Roadway Moving and Storage. Listening to Vince Rocco, you know the right partner makes all the difference. At Roadway, we deliver an experience your clients will love. For specialized services and white glove care, choose Roadway. Want to learn more? Email me at steven@roadwaymoving.com or visit roadwaymoving.com.
Residential and commercial closings to litigation, Romer Debbas is your full-service real estate law firm. We blend big firm knowledge with boutique-level attention, delivering outcomes that exceed every expectation. Contact us at romerdebbas.com.
You could make it here in New York. You could make it anywhere.
Greatest saying of all time.
Yeah, I didn't want to sing the song, but
I'll sing it. But listen, so first of all, I got my salesperson's license at NYU many years ago, and I'm still at it. So it all is individually, it's all personal. You keep going. But I have to think, though, that sometimes people, we're going to talk a little bit after the break about the current interest rate and how it's slowed down the market and all.
Yeah.
But brand new agents, and I talked to one a little while ago. He recognized who I was. He came up to me, shook my hand, and said, "Oh my God, I listen to your show all the time because I learn more by listening to experienced agents than I do in any classroom." And we all feel the same way.
Yeah.
Right? What are the goals of some of the students that you participate with every day, Marc, that want to get out there and kill it? Is there that sense of, inspiration enough where they want to get out there, and despite what Pierre and I are saying about, we don't know, do they still want to get out there and do it really hard?
Oh, for sure. And it's funny because we, all the time I know when your students show up at NYU because they're different than other NYU students. They come in a suit. They come prepared. They come to network. They come with cards. And, they're not walking around in gym shorts, at Washington Square. They're just
Casual.
not.
Yeah.
They're in Midtown, they're at conference. I ran into 5 students on my way up here. They're just hungry. You have to be.
I end every show, and I probably will today, about being, inspirational and being memorable. And no matter what field you are in, it's all about leaving your mark, leaving your impression, letting people know who you are. If it's real estate, hey, that's great. If it's something else, that's great too. But we have to figure out where we are. Pierre, so, again, along the lines of, who may be coming in, is there immediate panic okay, push the stop button. We have to stop, whatever we're doing. I said to Marc a minute ago, a lot of rich people are saying, or they're saying that a lot of rich people want to leave and head south for whatever reason. What about others in this town? What are they thinking? What about you mentioned rentals before, the cost of everything. Inflation right now is over 3% as of yesterday or the day before, higher than it's been since the beginning of the year. That affects housing tremendously.
Of course. I always say New York City has always been one of the 10 most expensive cities in the world. It really has, and that's always going to be the case. We have about 1 million rent-regulated units in New York City.
That's a lot.
That's a significant amount given the amount of total apartments that we have here. So we've done a good job, better than most cities in that regard. Could we do better? Absolutely. But I think the only way to help affordability is by incentivizing development. There has to be a parallel where the interests of society and corporate America can intersect. And what I mean by that is that providing tax incentives for developers and rezoning abilities for developers to develop housing tied to an affordable housing component and requirement is really your only way forward. There's no other way of doing it. You have to create the inventory, and you need the developers to create it, but you need to do it in a manner that's also responsible for society. So, look, if I'm a young generation and employment's not the greatest it's been, it's a bit subpar these days. Things are so expensive. I'm saddled in student debt. I'm intrigued by the free stuff, right? I'm intrigued by free everything for everybody, right? It's going to catch my attention. The problem the younger generation doesn't realize is that somebody has to pay for it, and who pays for that? Where's the government derive its revenue? Derive its revenue from taxes. It's tax base. If the tax base isn't here, then you don't have the revenue to pay for these things. Right now, the New York City is operating at a disastrous deficit. And we're billions and billions of dollars in a deficit. So adding more spending to the equation is not the answer. It's a very delicate balance between increasing taxes, creating more revenue, and spending wisely. And we're, I think, just too far in opposite extremes on both ends.
From your perspective, Marc, the housing market, we'll talk a little bit about it after the break, but the housing market has been stagnant for a while.
Yeah.
Does that have an effect on anything that your students may be looking at? Or from your opinion, when does it heat up again, or does it?
Yeah. Well, I want to go back to Pierre's point, which I think is spot on, which is like when all of these candidates say, my plan is for 100,000, 200,000, 300,000 units, I haven't heard people focus on the 100,000 that are just sitting there vacant.
Just sitting there, right.
And, when like people go out there in the world, it's like, our students want to do acquisitions. I'm like, you might want to think about like restructuring, asset management, special servicing right now, because like that's where the action is because of some of the horrible policies we made. And so I think like figuring out that solution, definitely key.
But as Pierre said before, it really comes down to the policies. It really does not come down to a party, because we had one mayor here for 3 terms, which was a long time, who, most of us don't even remember what party he started with or ended with.
Yeah.
And it really is the truth.
Or how he got a third term.
Or how he got a third term, exactly. And happily so. I voted for him 3 times. Happily so. But I mean, he did great for this town.
Yeah.
I, as a real estate agent, on top of everything else that I do, get concerned sometimes, because when I look at where we have been the last 2 years from an interest rate perspective, and Pierre, you're a real estate attorney, you see deals a hell of a lot more than I do. What are people thinking? And do you think that, I mean, we've dropped real estate interest rates a little bit, not a lot.
Yep.
What's the thought what are the comments that you hear from your customers?
Sure. It's a fantastic point. So we've had 1 rate cut so far this year.
Yeah.
It's penciled in that there should be 2 more this year and probably 1 going into next year. Now, interest rates on mortgages have not declined that substantially, right? A nominal sum. But your savvy buyer, which majority of buyers in New York City are rather savvy, see a light at the end of the tunnel. There's confidence now. Rate movement will take place. Now I believe it. It's not just headlines and speculation. So let me get into the market, because right now you've had 3 years of suppressed transaction activity in New York City and predominantly throughout the country, more so throughout the country. I think this is true, real pent-up demand. I think 2026 skyrockets. And I think if you're in an environment where you're 100 basis points lower than you are today in interest rates, there's so much pent-up demand and cash on the sidelines. Because keep in mind, like, how much wealth has been created in the last several years. The stock market every week breaks a record high. People are more liquid than they've ever been. Alternative assets like crypto are at an all-time high. There's just been a tremendous amount of wealth. You had the largest wealth transfer in U.S. history taking place in the next 5 to 10 years. So all those factors combined, when you talk about increased buying power, lower cost of leverage, I think it's a perfect storm for the market to skyrocket. So I'm very bullish on next year, even with all the concerns that we're talking about the mayor, and I share many of these concerns personally, but I still think the market next year skyrockets for the reasons of interest rates and increased buying power.
How much lower do you think that they're going to get? Or are they?
I wouldn't be surprised if you're in an environment next year in the low 5s. And what that means for the average consumer walking off the street, low fives. For your affluent consumer with private banking relationships, wealth management relationships, they're going to be trading in the low fours.
You know what? Amen to that. But, you know, there was a point in time where interest rates were normal and standard at 6%,
Sure.
7%. I remember one of the co-ops I bought on the Upper East Side 20 plus years ago. The interest rate was fixed 7% for 30 years. And I thought I robbed the bank.
Yep.
It had been up to 12%, 16%, whatever. So, you know, anything in the 5, 6, 6.5% is really not terrible. But we all know what mindset does to people. We have sellers who think they can still get $300,000 more for their apartment.
Mm-hmm.
They don't really pay attention to what the current market is.
Yeah.
From your perspective, Mark, where are we with all this? What are you hearing from an interest rate perspective? What buyers are waiting for? I will tell you, first-time buyers are still kind of sidelining and watching, and I still hear every once in a while, I'm waiting for things to crash. I mean, I can go back 20 years, I heard the same thing. It never crashes.
Yeah, I don't think, I mean, anybody that's waiting for a crash is probably going to be disappointed. I think it's more about like seeing the opportunity.
Yeah.
Right? So there's going to be opportunities potentially, right? Like, does it shift from condo back to rental?
Yeah.
Does it, right? Are people going to build more like 2 and 3 bedrooms versus the kind of, in my neighborhood, it was all studios and ones, right? And then like, there's this studio glut, right? And so like seeing those kinds of opportunities, I think is where it's at. And like, if you're waiting for like the New York City market to crash,
It's never going to happen.
I don't think
It's not going to happen. I
have.
have a studio on the market for about 9 months already that I can't see, and we lower the price, we're down to where I think it should be, and we'll see. But it's been on the market a very long time because I believe the first-time buyer market is just kind of hanging out there. What are you seeing more of, Pierre, in your business? I mean, I know you run the gamut with price points, but are you seeing a lot of first-time buyers still coming to the table, still signing contracts, and still doing deals?
So the last few years have been dominated by the high-end market because they're less interest
All
rate
cash.
sensitive, all cash. You know, last year, I believe the stat in New York City is over 70% of deals in Manhattan were cash deals. Historically, that average is closer to 50%. That's a staggering difference, right? That demographic is not interest rate sensitive. And also, like I was describing, the amount of wealth that's been created has been significant. So luckily, though, with rates showing a downward trend, we are seeing first-time home buyers enter the market because they are worried about the increased competition that I'm predicting will take place 6 months from now. Let me get into the market. I believe this is going to happen. I can stomach the higher carrying costs for a short period of time. I'd rather do that than risk having to go into bidding wars and not being able to afford anything in 6 to 12 months from now. So the entry-level buyer is coming back, which is great for the market. It's very healthy for the market. You can't have a market dominated just by the high end.
It's interesting. And what about investors? What we talk a lot about, and one of the things that I've been sad about is the foreign investor marketplace. You know, I've sold a lot of brand new developments through the years, ground up, you know, construction. And I can't tell you how many foreign investors from all countries would come snap up apartments, either from an investment perspective or to live in. You know, that dried up a bunch of years ago. It has trickled back a little bit, but I don't really see enough of a foreign investment opportunity any longer. What do you think is the reason for that, Mark? Is it because of, you know, geopolitical reasons? Is it because of the interest rate? Is it because they fear that New York or the U.S. right now or 2 years ago was just not the place to invest in? I mean, what was driving that?
I think it's cyclical. I mean, I do think there are concerns, right? I mean, certainly like in the education space, like we just need clarity on this visa thing. Like however it shakes out, just give us some clarity.
Yeah.
And I imagine that also, right? Because those students, those international students have parents, right? If you go to Ann Arbor or Columbus or other places, New York, those students were buying apartments for their kids.
Absolutely.
And for pied-à-terres, right? I don't know if that's
Absolutely.
a huge market,
Well, it used to
but
be.
like there are a lot of different markets where international people are playing. And if they don't have certainty, right, then you're going to lose them.
Yeah, what's happened to the foreign investor marketplace in general?
So there's 3 main incentives for foreign buyers to come here. Exchange rate play, to put money into out of their countries
point,
in a
exchange
stable
rate play,
asset,
yeah.
and acquire a trophy property. And I go through each three. Number one, exchange rate play. The dollar strengthened significantly. The last 15, 20 years ago, the euro to the dollar is about 1.6 to 1, right? That is an incredible discount for a foreign buyer coming into New York City to buy these properties. So that was a huge incentive. That's no longer the case. Exchange rate play is no longer there. Number two, getting their money out of their country. The fear of economic turmoil in their country, China, Europe, Greece was about to go under 10 years ago. And a lot of panic resulted in people taking money out of their country to put into a stable market. Are we viewed to be as stable as we used to be given our geopolitical issues? Probably not, right? The trophy property component, that still exists. People still want to acquire the Billionaires Row condo that they can add to their portfolio, that's world famous that everybody will know about, with Central Park views on 57th Street. Those are transacting. So it is still an active market, but I agree with you, Vince. It's nowhere near as active as it was, 10 to 20 years ago.
What is the, I ask people, guests on my show all the time, because we all have our own number, but what is that trophy or high-end level apartments? Where does it start? Is it 4 million, 5 million, 10 million? We've seen all kinds of numbers, right?
Yep.
I say it really probably these days should be about 6 or 7 million, but what do you think it is?
That's a funny one. I'd say 5 million and up is the ultra luxury market. Yeah, I think it's a good barometer. But I think when you talk about these real trophy properties, you're talking 10 million and up.
Yeah. Interesting. It's unbelievable. Somebody said to me there was like a $250 million penthouse on the market either last year or the year before. I quite frankly don't even remember if it sold. But somebody said to me, if I'm going to spend $250 million, I'm going to buy an island and a boat and float around the water for the rest of my life.
Yeah.
I'm not buying something up in the sky. It's like,
it's a good point.
Yeah.
It is a good point, but if you got $3 billion, I guess it doesn't matter, right?
Right.
Or
Right.
whatever the number is.
Yeah. But I think also, we have to, even at the 10 million, that's the fourth house, right? It's not the second house.
Well,
right?
That's a very good
Great
point.
And so I think it's like, you have the one in the sky, you have the one on the water, you might have the private island.
You may have the island, right?
Yeah, well, it is what it is. Just quickly, we've got about a minute left. Predictions between now and, say, the end of the year. Okay, we're going into holiday season, right? We just came out of the Jewish holidays. We're going into Thanksgiving. We're going into Christmas, Hanukkah. Predictions. Where are we going to be between now and 2 months from now?
We're still talking about the mayor?
No, well, the market, the New York market, including
Yeah.
what the mayor may do or not.
Yeah. One thing I like about New Yorkers is we're not quiet. And so
We are not quiet.
as uneven as de Blasio was, he had checks, right? He had the hotel unions, he had the cops, remember when they turned their back? And so I think that's going to be a moderating force for whoever the mayor is. Like, New Yorkers are going to be like, no, you're not doing that, right? Like, we're out in the streets. And so that's why I'm not as concerned. I see, right, like Mom Dami already meeting with the real estate community. And so, like, these things are probably going to moderate. I don't know who's going to win.
I think my prediction is really, I don't know who's going to win either, but I think my prediction between now and the end of the year is going to be, regardless of who wins, everybody's going to kind of stand in place, take their time, reassess, ask questions, really not do anything. What do you say?
I think in any election cycle, the minute's over, people have a sigh of relief no matter what the results or the outcome are. And they go ahead and they transact. So I think people will be transacting November 6th and we'll be moving on regardless of who wins. I think people know that New York City is the most resilient city in the world. I think people know a mayor can only do so much. And at 4 years of a policy, regardless if it's radical or not, chances are not much will change in reality given our bureaucracy in the city.
And as anybody who knows me, whenever the words, the name New York City come to mind, I change that and call it my town, because I agree with these two. They're 100% correct. You're getting no place better than good old Gotham and New York City. Marc Norman, Pierre Debbas, thank you so much for joining us today. This is Talking New York Real Estate at the Expo here at the Marriott Marquis Hotel. We'll be back later with something else. Don't go anywhere.